Welcome to the Capital Spreads Weekly Update. Today is Tuesday, the 19th of March 2013. A very hectic start to this week. Over the weekend, obviously this depositor tax has been, well, not yet imposed, but is being debated in the Cypriot Parliament as to whether or how they will go about raising funds for their banking sector. So lots of argument over the fact that, that means it's not a tax. What does that set? What precedent does that set for the rest of the Eurozone? And of course, the banks remain closed today. They were yesterday for a bank holiday in Cyprus, and they are expected to be closed tomorrow as well to prevent any sort of run on those banks, and ahead of an expected vote tonight as to exactly how they will tax any money deposited in Cyprus's banks. There is also uncertainty over whether that vote will actually go ahead, and there's just been some news that maybe deposits up to 20,000 euros won't be taxed at all, and then there'll be a sort of tiered tax for deposits greater than that. So really there's a great sort of deal of uncertainty. There was a big sell-off yesterday. Markets did actually bounce relatively well off their lows. So currently the FTSE is at 64.50, the Dow at 14,475. The euro obviously coming under pressure, it's back below the 1.3 level, it's at 129.40. Cable at 150.75. Gold just benefiting a little bit from the uncertainty as its sort of safe haven status is back above 1600, but only just at 1601, and Brent is a bit softer at 109 on the figure. So obviously yesterday was a pretty hectic day, a very volatile start to the week, and today we see the commencement of what is to be quite a busy week in terms of economic data, in particular for the UK. So today we get CPI data, expected to come in at 2.7 year on year. Later this morning we get the German ZEW survey. From the US there's housing starts data, and of course in Cyprus we are expecting at this moment in time the vote to go ahead as to exactly how to impose that tax on depositors, but of course there are rumours that it may be delayed. So going into Wednesday, we have unemployment data, a very busy day for the UK. So unemployment data from the UK, as well as the MPC minutes as well. Both will be interesting pieces of data because the unemployment situation is set to improve further. Claimant counts are expected to fall. So, of course, we continue to see quite a healthy labour market in the UK, but, of course, a broader weakening economy. So, a funny juxtaposition there. The UK MPC minutes, that will be very interesting to see if there have been any more votes for QE. So, of course, last time we saw a 6-3 split. It'll be interesting to see if any more people join that further QE camp. So that will be interesting. But then the highlight of Wednesday will certainly be the UK budget. So the spring budget is due to be announced by the Chancellor, and it'll be very interesting to see what his view is and the Office of Budget Responsibility's view is of our fiscal situation and possible growth forecasts going forward. And then later on we get the US FOMC meeting, followed by Ben Bernanke's press conference. So it'll be interesting again to see from them exactly how they see the QE panning out. Will there be any indication of a slowing down of their asset purchases? So Wednesday could be a very busy day. Then into Thursday we've got PMIs from Europe, mainly Germany, and then across the Eurozone we get UK retail sales, and then of course the weekly initial jobless claims from the US. Also from the US there's the Philly Fed and existing home sales. And then Friday, probably a relatively quiet end to the week, we get French business consumer confidence and French business confidence, and then we get German IFO survey as well. So really a very busy week. The things have kicked off, of course, focusing very much on Cyprus. We'll monitor that closely as well. and it'll be interesting to see whether clients who hold a very bearish view of indices at the moment, whether that will continue into the end of what is a very busy week. That's it. As ever, do give us feedback. media@capitalspreads.com.